Time now for some business news. Yuko Roy joins me on the set. Morning to you, Yuko.
Hi.
Starting with Disney announcing its first quarterly results of this year, hit hard by the pandemic, but still managed to return profit.
Well, sales at Disney for the quarter ending in January stood at $16.2 billion. That's down 22% from a year earlier, but still better than expectations. While the theme park business took a beating from the pandemic, its streaming service did well, offsetting the losses. Here's Camille Nedelec with the numbers.
The happiest place on earth fell quiet in 2020, but Disney was still able to post a surprise quarterly profit with a net income of $17 million. Buoyed up by hits such as The Mandalorian and Soul, the group's direct-to-consumer streaming business now has 146 million subscribers, the bulk of which comes from the flagship Disney Plus, which doubled from this time last year.
Yes! Woohoo!
That increase is part of an industry-wide pandemic boost to at-home entertainment.
During this difficult time, we have made significant changes while finding new and innovative ways to conduct our businesses. I'm really proud of how well our team has performed in the face of a multitude of ongoing challenges. Disney Plus has exceeded even our highest expectations.
ESPN Plus subscribers jumped 83% to 12 million, and Hulu subscribers rose 30% to 39.4 million. It comes as park revenue fell by over half amid ongoing park closures due to the pandemic and limits on visitor numbers to ensure social distancing, costing the theme park division of Disney around $2.6 billion in the first quarter of 2021 alone. Cruises have also been suspended. The company's strategy is to double down on its streaming services, and later this month plans to launch a new international streaming service called Star.
Well, positive results, seeing Disney have a good day on the stock market as well.
That's right. Yesterday it rose to above its record highs that previously made earlier in the week. Now, European markets, though, today took off to a rather wobbly start, quickly dropping into negative territory after the open. Tech stocks are faring relatively well, while retail, energy and industrials are under pressure. As you can see there, L'Oréal here in France shares rising 1% on better than expected results. Not much activity earlier in Asia as many markets were closed for the Chinese New Year. Tokyo's Nikkei dropped below a record high after 4 days of rallies as investors turned to profit-taking.
Now, in the United States, a congressional committee has backed a proposal to give airlines another $14 billion in aid to help them stay afloat.
Well, the House Financial Services Committee has approved a proposal to extend the payroll assistance program through September to help U.S. airlines keep paying staff. The $14 billion package is to be included in a broader $1.9 trillion COVID-19 relief package that is currently being negotiated in Congress. It would be the third round of support for the U.S. airline industry. American Airlines and United Airlines have both warned that around 27,000 people could be furloughed without an extension to the existing program after it expires on April the 1st.
Meanwhile, here in France, a major expansion plan at Paris's main airport has been scrapped.
That's right. It's the government, the environment minister and the company announcing the decision yesterday. The project was to build a fourth terminal at Roissy-Charles de Gaulle Airport just outside the capital. Now, the government and the ADP, the group that owns the airport, cited environmental concerns as the reason, though a massive fall in aviation traffic during the global pandemic had also cast doubts on the plan's viability. The fourth terminal had been expected to serve an additional 35 to 40 million passengers annually.
Now, we were discussing earlier how it's Chinese New Year. This weekend, though, another celebration, Valentine's Day. And because of the pandemic, many couples will probably be staying at home, but not everyone.
That's right. Well, a romantic candlelit dinner at a restaurant is, for now, for many couples, is out of the question this year, especially here in Europe, where many restaurants and cafes are still shut because of COVID-19. But in Brussels, a handful of hotels have come up with an idea to still provide fancy meals to people by turning guest rooms into individual dining spaces just for 2 people. Guests can still enjoy a 4-course meal with a bottle of champagne. Hotel managers refusing to call it a room service. Let's hear from one of them.
It's not at all room service, because on room service you do not have the experience that we want. So basically people are really dressing themselves up for a really good night on a Saturday evening. So children are at home, just couples are coming here, it's 2 people. So it's, first of all, it's already the me time and the quality time.
Yuka, another look at love in the time of COVID. All right, thank you very much, Yuka, with a look at some of the business news. We